Hello guys, and welcome back to another video. In this video we'll be going over how to find the daily bias. Now daily bias is one of the most overcomplicated topics, but here in this video I'll show you exactly how to find daily bias and how to make it as simple as possible. Okay, so without further ado, let's get straight into it. So to start this video off, I'll be going over previous days highs and previous days lows. Now with previous days highs and lows, these areas contain high amounts of liquidity. Previous day high and low can be used to frame a potential draw on liquidity. Okay guys, so here I have two diagrams now, and in these two examples, is price more likely to reach for previous day high or previous day low? So if we take a look at the left hand side example first, we can see that price is trending in an upwards direction. And given that we are not going to be consolidating, I would expect either the previous day high or the previous day low to get traded to. So now, which one is more likely? So if we are trending in an upwards direction, I would expect this day here to go for previous day high. Similarly, if we take a look at the right hand side example, we can see that we were obviously trending downwards. And given that we will not be consolidating, I would expect either the previous day low or previous day high to be taken on this candlestick right here, or both in some extreme scenarios, right? So on this day here, my bias would be bearish given we are trending downwards, and I would expect this previous day low to be taken on this day here. Okay guys, so now I am on a daily time frame on Nasdaq, and I will now be going and showing you the implementation of this previous day high and previous day low idea to help you derive a daily bias. Right now, we can see that price took out previous day's low right here, and we failed to close below it. Once I've seen that, my bias going into the next day or days would be looking to see this high getting taken. Okay, so on this day here, we failed to take out previous day's low or high. We managed to stay in between. So just because we did not manage to take it out on this occasion here, on the next candle, I'll be framing my daily bias to be this high here and this high here. So if I now play out price, we have a bit of a retracement, taking out previous day's low, sell side taken here, then we take out previous day's high here. Notice how we didn't displace convincingly below this low here. So going into this day here, my bias would be a retracement and then looking to target this high here. So now that we've taken this high here on this candlestick right here, the next day I would be looking to take this high right here. So if we play price out, we then take out this high here along with these highs here as well. Now again, for the next day, my bias would be derived like this. I would mark out a fib from this high here to this low here. 50% is here. The likely drawn liquidity would be towards equilibrium, and these highs are just above it. And I'm anticipating a trending environment where we are likely to have prolonged movement to the upside until we get into above these highs and towards this bullish order block here with these 3 consecutive up close candles. So next day, I'll be anticipating the previous day's high to get violated. So let's see if that happens. And we violate it right there, and these relatively equal highs right here as well, filling in this volume balance as well. So now if I continue playing price, I will drag this level out here as well as the opening of the bearish order block. So I have the low and the opening of the bearish order block, and I will look to see if we have a potential reversal scenario, potentially aiming for this swing low right here. So if I play price out, so we hit the opening price right there, and we failed to close above this swing high right there. So going into the next day, I will have a reversal idea in mind for my daily bias, looking to target the previous day's low. So if we play price out, we get that right there. And again, for the next day, I will look to see the same thing happen, take out the previous day low, assuming that we are in a trending environment, and looking to reach for this daily objective, which is the swing low right here. So if I play price out, we take out the high, but then reverse and then take out this high right here. So now we take out the high, and what do we see the next day? Take out this high here, and we fail to close above it, and we get a down close candle. So going into the next day, my bias would be bearish. I'll be aiming for this low here and this swing low right here. So if we play it out, we failed to take it out on this candle here, neither the high or low, but on this candle here, we managed to absolutely hit it. Now we don't manage to close below it. So on this occasion here, I'll be looking to take out this high right here for the next day. So let's see that play out. We failed to close above this high right here. There's a lack of displacement. So going into the next day, my bias would be previous day's low for a reversal scenario. So if I play price out, we have a nice large range candle and take out previous day's low as well as this swing low right here. So now, as you guys can see, we have respected this bearish order block. We reached up into a premium. Now we're likely going to fill in this inefficiency right here and potentially go and take this swing low out right there. So if I play price out, going into the next day, my bias would be looking to aim for this previous day low. So if I play the next day out, we hit it there and have a nice large range candle, completely filling in this buy side imbalance, sell side inefficiency or BISI. And for the next day, I'll be looking for us to take out this low right here, since we did not show any kind of reaction off of this BISI right here. So if I play price out, that's what we do. We gap lower and we close below this low here, taking it out. Now guys, your bias will not be right every single time. However, if you can frame your daily bias off of previous days highs and lows, and you have further context such as premium, discount and other PD arrays, you're more likely to be right than wrong. Okay guys, now the next thing I like to look at for helping me to determine my bias is the previous week's high and low. The previous week high and low are liquidity levels that can be used to frame a draw on liquidity, a reversal or continuation. So for example, on the left hand side, I have an example of what a weekly reversal would look like. From this low till this high here was the previous week's weekly range. Now how I would use this information is, once we take out the previous week's high, for example, as shown here, we then fail to close above it, fail to displace above it, and we close back inside the range. So my bias going into the rest of the week will be to look to attack the previous week's low. That would be the draw on liquidity for this week. Now the previous week's high and low can also help me to frame a weekly continuation. If I look at the previous week's range from this low to this high, I can use a fib, mark out 50%, look at discount arrays. So here we have this bullish order block, 50% is this level here, right? So if I mark that on my fib, 50% is here. I would look at a discount rate in a discount. So this bullish order block's opening price would be my entry, and I would look to target the previous week's high as a draw on liquidity for a weekly continuation in the following week. Now, the next thing I like to look for when helping me to derive bias is swing highs and swing lows. Okay, so first off, you need to know what a swing high and swing low is. So I've drawn a diagram both on the left hand side and right hand side to help you understand what a swing high and swing low is. So all a swing high is on this left hand side is a free candle pattern with a high, with a lower high to the left and a lower high to the right. So this would be your swing high. Now, similarly here for swing low, it's a free candle pattern. We have a low with a higher low to the left and a higher low to the right. Now, it's very important that you understand what these terms mean, because it will serve you later when I start explaining how to use them to derive bias. Swing highs and lows are key liquidity levels where buy side and sell side liquidity rest, and we can use these levels to anticipate the draw on liquidity, a reversal scenario or a continuation. Okay, so here on the left hand side, we can see that price has had a displacement to the upside. We created a fair value gap right here, a bullish order block with this down close candle. We trade into it right there on this candlestick here, and then we trade above this swing high here, closing above it with displacement. Once we see this, we close above it, we can anticipate a continuation to the upside, right? So then my bias for this day here would be seeing previous day's high getting traded to, and as you guys can see, we trade to it on this candlestick right here. So now guys, if we look on the right hand side, we can see the same thing occurring. We have a down close candle here, displacement to the upside, validating this as a bullish order block. We have a fair value gap right here, price trades into that bullish order block and fair value gap, and then on this candlestick right here, we take this swing high out right there, failing to close above it and also failing to displace above it as well. So this to me was a stop hunt for buy side liquidity above this swing high right here. We close back into the range. So going into the next day, my bias would be down, aiming for previous day's low on this candlestick right here and here. And as you guys can see, we deliver that on this candlestick right here. And going into this day here, the same thing will be on my mind, aiming for previous day's low. We get that right there. And we also take out this swing low right here. So if we see price doing something like this, we can anticipate a reversal scenario and our bias would be bearish. Now guys, another point I want to touch on is how we can use PD arrays to help anticipate the bias. So we can anticipate a draw on liquidity to specific PD arrays, a reversal scenario once we reach a specific PD array, or a continuation once we hit a specific PD array. So for example, if we take a look at the left hand side right here of this price action, we can see a down close candle, which is a bullish order block, and a fair value gap. So once we trade into these discount arrays, we can anticipate a reaction on this candlestick like that. And then the next day, we would anticipate a reversal to then take out this swing high. You would be in your lower time frames looking for reversal patterns on this day here to then look to target this swing high right here. Now guys, if we look on the right hand side example now, we can see that same thing. We have a down close candle here before we get displacement to the upside, closing above it, validating this as a bullish order block. We also have a fair value gap, trade into that on this candle here. However, on this scenario here, we'd fail to close above this swing high here, also failing to displace, and then we pull back inside the range. So then on the next candle, we can use a PD array to anticipate a reversal scenario. So a very nice PD array we have here is this premium wick right here. Remember, we treat wicks as gaps. So I'll be looking at consequent encroachment off of this premium wick. So once it hits consequent encroachment, I will then go down in my lower time frames on this specific day right here and look for reversal scenarios to then target this low here, previous day's low, and look to close in this fair value gap. And then on this day here, same thing, I would anticipate a draw on the previous day's low, aiming for the sell side below this swing low here, and you get the idea. Now we can also use inversion of PD arrays now. Now this is a bit more advanced, but I'm going to share it with you anyways. Once we close below this fair value gap right here on this candlestick here, we can anticipate a potential return up into this inversion fair value gap, retrade to it, and then look for continuation on the downside. Also, if you guys notice, once we violate this bullish order block here on this candle here, once we retrade back into this down close candle, which now becomes a bearish breaker because we have a high, we have a low, higher high, and now a lower low. So this becomes an inversion order block, or also known as a breaker, right? So once we retrade back into it, we can then look for a selling scenario to then see a potential continuation of the price move to the downside. So now guys, let's get into some chart examples to show you how to derive bias using these terms. Now guys, before we get right back into the video, I really quickly want to talk about my private mentorship. Now guys, if you give me 30 seconds, I promise you, you will change the whole trajectory of your trading career. With this mentorship guys, I will teach you the exact model that I've taught to my members, which has helped them to scale to over 7 figures plus in funding from prop firms, and they are consistently making $10,000 a month from trading, and they are quitting their jobs for good. I have literal students that are making yearly and monthly salaries in a day. Okay, you guys might think this is a lie, but trust me guys, when you know how to trade, this is completely possible and is a reality that most people are living. Now you'll have a whole host of benefits as listed here. You can have a read for it yourself. This is a lifetime access for a one-time payment only. I have now put the price down by £100. It was previously $249.99, but you will now be getting it for a limited time only for $149.99. Okay, make the most of this offer guys. Learn the skill set properly. I'm willing to teach that to you guys here for a specific price. I will teach you the exact blueprint to help you get funded and quit your job guys and live a life you've always wanted to live. Stop wasting your money on prop firms blowing challenges when you have not even learned the skill set in the first place. Okay, so start your journey to profitability today. Click the first link in the description and be a part of the best ICT community in the world. So with that being said, let's get straight back into the video. Okay guys, now I'm on a daily chart on NQ. Now we'll be incorporating all of these concepts together to help us derive a daily bias. So first off, let's start off by identifying our current market structure and what trend we are currently in. So as you guys can see, we are clearly in a very strong bullish trend, especially here. We're clearly trending, and I would like to see if we can continue and sustain this bullish movement to the upside. So now if we look right here in this specific region of price action, I have marked out the previous week's low and high. This is Monday, this is Tuesday creating the low of the week, and this is Thursday creating the high of the week, and then this is Friday and we close right there. So now going into the next week, let's see how we can potentially sustain a bullish move to the upside. So going into Monday now, let's play price out. Okay, so we took out the previous day's low. We failed to close and displace below it. So to me, this was a liquidity sweep on the previous day low. So going into Tuesday, I'll be looking to take out Monday's high. So let's play price out. Okay, we took out Monday's high and then quickly displaced at a downside, taking out the previous week's low. We failed to close below it. So to me, this is a valid liquidity sweep. So now that I've gotten this, in my mind, this is a Judas swing for the week, and we are potentially in for a reversal scenario to take out the previous week's high. So now let's see what we get on Wednesday. Okay, so Wednesday here, we failed to close below it as well. We get a nice bullish candle here. Let's see what we get on Thursday. Thursday, we take out previous day's high. So now on Friday, I would like to see some displacement to really confirm that we are now bullish going into the next week, to then take out this swing high right here. So now let's see what we get. Okay, Friday we get a very nice displacement here. This is now a bullish order block. So if I draw this out, okay, this is our bullish order block. And then we have our mean threshold right there and this midline right here. Okay, so now this was Friday. Now going into Monday, I would like to see us retest this area right here and see some form of movement towards the swing high. So now going into Monday, we get a nice retest of this order block here, as well as this previous week's low right there. Again, take out previous day's low and get a nice displacement to the upside. Now this is also a propulsion block. Okay, draw the opening price. Notice how the bodies are in the upper half. We're respecting mean threshold of this down close candle. So now going into, so this is a Tuesday. So going into Wednesday, I would like to see us support this opening price for a move to the upside, drawing towards this swing high right here. Okay, we get that right there. Beautiful, respect this opening price. So now going to Thursday, can we trade towards this high here? We take our previous day's high. However, we failed to close above it. So now going into the next day, which is a Friday, I don't expect us to take out previous day's high or low. I expect us to be range bound. Let's see if we get that. And as you guys can see, we failed to take the high or low. So now going into the next week on Monday, I would really like to see us take out this high here. So let's see if we get that. And we get that right there. So hopefully you guys are now starting to understand how we can incorporate all of these concepts together, not just one by themselves, but all of them together to help us derive a daily bias. Now guys, I really highly suggest you watch this video multiple times, since you definitely will not get it on the first time. So with that being said guys, that's pretty much everything I wanted to cover in this video. Hopefully you did learn something new. If you have any questions, please let me know in the comments below. And until I see you next time, be safe.